So I want to talk about not only the quarter we just saw, but the outlook for 2021. It does seem like we have this rail recovery beginning to take root here. It looks like you're forecasting 2021 volume increases of 4 to 6%. Where are you seeing those signs of renewed strength? And I guess perhaps just as importantly, what does it mean more broadly for pricing?
Yeah, before I mention what we expect in 2021, I just want to look backward for a second. We had a terrific fourth quarter and year, and that's all a testament to the women and men of Union Pacific who did tremendous work running the railroad in the face of a really difficult environment. As we look into 2021, you're exactly right. We guided to 4 to 6% growth. We think that's on the backs of continued e-commerce strength. We think the housing market continues to be in pretty good shape. We think automotive recovers specifically from its horrendous second quarter of 2020. And we're looking for the industrial economy to continue to grow. It's growing sequentially. It has yet to turn the corner and be a positive for us year over year, but we expect that to happen sometime in 2021. From a pricing perspective, we're in an environment where trucks are very tight and there's a lot of demand given the strength in e-commerce, and that's a good environment to enter the year in.
Yeah, and just to dig into that a little bit more, in terms of what that means for a railroad such as yours to take market share from the trucking market, I guess what does that look like longer term in terms of those intermodal volumes? And in terms of the West Coast ports right now, where we've been getting reports of some gridlock, some backlog in the midst of record imports from China, I guess how much congestion are you seeing, and would you expect that to ease this year?
Yeah, well, let me start on growth and taking trucks off the highway. That's a good thing from an ESG perspective. The way we do that with is consistent, reliable service, which we have, and being very competitive on our cost basis, which we are. So we're seeing results and wins when we're trying to help customers remove trucks off the highway and satisfy part of their supply chain needs. In terms of the LA Basin, what's going on there, that's really a story about a lot of demand, again, through e-commerce, landing and imports on the port docks, and then a fair portion of that going inland in LA to a distribution warehouse where it's transloaded into a domestic box and then sent further into the country. That process of getting it from the dock to the distribution site for transload has been congested. Once it gets on the railroad, whether it's direct from dock in an international box or from a distribution center in a domestic box, our service has been very sound, and we showed that in our KPIs through all of last year.
Lance, you said the magic letters ESG. I know Kramer wanted me to talk to you about it this morning. How are you positioning it as a selling point as it pertains to the company, and how is it evolving as we obviously are talking more and more about it and will for years to come?
Yeah, Carl, it's really interesting how ESG has become a top-of-mind topic for many of our investors. It's always been important for a number of our stakeholders, and now it's important, it appears, across the spectrum. So ESG to us is not just doing the right thing, it's an imperative inside of our business strategy. We talked this morning about being more fuel efficient in the fourth quarter, getting a 2% C rate core and a 4% reported C rate improvement. We've talked also with our investors about the 17 goals that the United Nations has set up for achievement by 2030. We're looking at 7 of those specifically and how we can support them. And it's things like we've committed to doubling the amount of female participation in our workforce and a 39% increase in the minority participation in our workforce by 2030. We're relentless about fuel rate and helping our customers reduce their carbon footprint while we reduce our own. So it's kind of across the spectrum, and it's quite real, and it's wired in. It's a core part of our strategy now.
With the Biden administration in place, and I realize freight railroads such as yours are private and thus privately have been funding their own and investing in their own infrastructure for quite some time now. But more broadly speaking, is this the year when we finally get some sort of bigger infrastructure deal for the U.S.?
Well, you know, we support a broad infrastructure deal in the United States. We think inclusive of rural broadband, which is very important for the economy. We think improving our roads, our bridges, improving power distribution. There's just a host of areas where targeted, good, sound infrastructure spend would help the U.S. economy grow. And a growing, thriving U.S. economy is a great thing for Union Pacific.
Shepard Smith here. Thanks for watching CNBC on YouTube.